Hello everybody, welcome to the January, Monday, and Tuesday, 20th through 21st price review. So getting started, we have the NASDAQ on the left and the S&P on the right. We are looking at the daily time frame. And on Sunday, you guys saw me mention this small little opening gap right here. And as we can see, we traded through that and then traded higher to our targets. We still have this high right here on the NASDAQ. These two highs are still where we want to see price draw towards, and then these highs up here on the S&P are where we want to see price draw towards. So looking at the hourly time frame, getting a little bit more in depth here, we can see that Monday we formed a small little SMT that was not sequential, traded higher, and then returned back through the gap on the NASDAQ. On the S&P, we had that SMT traded higher, and then we traded to that same gap that we had outlined. So that gap was the first new week opening gap of the month. And as you can see, the NASDAQ traded through that gap, but the S&P failed to trade through that gap. And NASDAQ is still the weakest out of the S&P and the Dow. So that is why it traded through that gap. So this right here is another form of crack in correlation. Whenever you're bullish, the weaker pair, if it trades through a gap, especially like a new week opening gap or a new day opening gap, if it trades through that gap, but the other asset you're looking at trades above the gap or can't make it all the way past through it, that is a form of cracking correlation, and that is why price has expanded higher for Tuesday. And then we formed another cracking correlation here that we will zoom in on a lower time frame. We formed a hidden SMT between the London session and the New York session. So now we're looking at the 15-minute time frame. So we formed that SMT and then created a TPD and then fell back within the range, trading back within that gap one more time and then expanding higher away from it. So with hidden SMTs, you always want to focus on the closes. You don't just want to focus on the bulkiest candle, if that makes sense. So for example, right here, this would be the highest close of Q2 for the S&P. You would not mark out the high or the opening of this candle right here. This is a bearish candle, so this is the open. Instead, you would look at this candle right here, which is the close. So with hidden SMTs, you're still looking at normal SMT, but you're looking at it between the closes of the candles. So for example, right here, this is the close, the highest close of Q2, and this is the highest close of Q3 before the drop. And note, we had a TPD after the SMT to confirm it. So after we traded back within that gap, we formed another SMT that was bullish, and the reason why that overrode the previous hidden SMT that we created is because we formed an hourly TPD right here. If you look between the NASDAQ and the S&P, we formed a TPD on top of that opening gap that we had outlined on Sunday. So the entirety of this week so far has just been revolving around this gap, and we've had multiple opportunities within this gap. And keep in mind, this was below the true open, and it formed an SMT and then expanded higher after the hourly TPD. Now, in low probability conditions, and on Sunday we said that Monday and Tuesday would likely be low probability. On low probability conditions, price typically likes to not follow a sequence, if that makes sense. So typically with daily SMTs, you want to see a 15-minute PSP or TPD confirm that SMT. But here we had an hourly TPD confirm it, and then price expanded higher, taking out that previous hidden SMT. So now we're looking at the Forex triad. We have the dollar, the euro, and the pound. Now on Sunday, we had a weekly TPD, which I didn't bring attention to you guys, but it was there. And that is why I wanted to see the euro trade within this gap right here, and the pound take this low and form an SMT before continuing higher. So we didn't get the SMT that we were looking for, and sometimes that will happen, and I will explain why in a moment. But the reason why I wanted to see the pound take the low is because it was the down close candle, while the euro was the up close candle. So the pound was the weakest compared to the euro, so I wanted to see an SMT between those two. And whenever you're looking for an asset to make a failure swing after a TPD, the weaker asset typically trades and makes the SMT, while the asset that's stronger will trade into a gap. So that's why I outlined this gap in specific. But on Monday, which was the bank holiday, this candle right here, I believe it was 8:30, completely expanded way high. It was like a CPI release, which is not normal on bank holidays. And the reason why that happened is because there was real world news. And whenever you have real world news, typically that is when manual intervention will take place. So as we can see, at that same time, the dollar completely collapsed, which caused the euro and the pound to expand higher before creating that Kraken correlation that we wanted to see. So whenever you have big real world news like that, typically manual intervention takes place. Now, manual intervention is whenever the market pretty much does what it wants to do without reason, and it will expand where it wants to go by the push of a button. So hopefully you guys found that one insightful. I will speak with you all tomorrow in a live stream. Good luck and good trading.